All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. My apologies. I'm just trying to finish up an Instagram post that I posted probably just about a minute ago. We just put a little bit of details on the technicals so you could save it for your future reference on Instagram. As your first level of resistance. There you go. A downward gap to fill at 3,700. Okay, there you go. All set. Sorry about that, guys. If you want to check out the latest post, I just updated it. It's this article here from Bloomberg regarding retail investors rush to buy the dip again, according to about the inflows that just came in the U.S. stock market. About $1 billion just came into the market. The rolling 21 days average of net flows, you can see in the bottom left-hand corner. So that is up there for you guys. I hope you enjoyed that note. If you do like it, make sure to like the posts, and then marketing lets us know what exactly it is that you like. If it's more charts, if it's more macro explanations, Federal Reserve stuff, news. In regards to news, I think Twitter is probably the best vehicle for that because it's live, real time. Instagram doesn't give you the feed unless you put us as a favorite. Again, that's really up to you. Again, little stuff like that. Again, let us know what you like: graphs, charts, a macro explanation. I live for this stuff. I love this stuff. I love talking about it. I love explaining it because it's just fun. That's all. I love talking about the stock market. That's why you're here. Good morning. It is September, October 5th on a Wednesday, 2022. Let's go ahead and get started. I'm your host, and I'm ready to rock. William is already starting off in the morning with a question. I love it. Morning, boss. Thoughts on the open positions with the team? I do have a couple of positions open. SPY was a nice one. I did hold that for the gap up. I do have a Google open this morning. Again, we just have a little bit of a downbeat on the S&P 500 currently. Not really worried. You're not going to get stocks going up, 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 up. Just continuous. You're going to get a little bit of a pullback here and there. That's completely normal, especially with the dollar going higher. So again, we know that Google is a big part of the S&P, so that's going to be a little bit of a lower beta in that aspect. As regards to what's open, and I also have the 380 spies that was green yesterday. So again, I do expect a continuation to the upside. A little bit of a pullback in terms of SPY. We're going to go over that chart in a second, but I do like both still. So again, I'm still rolling with the team. I trade every single signal that we have out there for our signal group. So again, it's important to go over the stuff. That's why Nick does a video for you guys every evening to go over all the positions and some of the things and his thoughts that he's been watching throughout the sessions. But William, thank you for being part of the team. It's important that you ask these questions because it's not just to give you signals, it's just for you to learn as well through the ups and downs of the market. And what better way now with the school of the hard knocks that we've been having the past 2 years? With that being said, Dow futures are down 283 points, Nasdaq down 121 points, down about 1%, S&P down 35, and the Russell down 22, about 1.25%. Crude oil is up today. We do have OPEC meetings up about 0.72%, yet gasoline down about 1.22%. Remember how much gasoline and oil has fallen? We've talked about oil ad nauseum at this point. And again, where are we hovering on? 87, 85. Once we start getting above 90, it does get interesting. I think they are going to get some cuts for production. We had an API number that came out yesterday. I really look at the crude oil inventories at 10:30 to kind of give me an eye. Let's go and take a look at crude together quickly. You can see the 50-day moving average right around 88 at this moment. That has been pretty much the resistance point for the oil market. And you can see 96.80 or so, or 97, let's call it. That's the 50-day. That was the 50-day. That was rejected as well. And then also in mid-June to July. So again, it's nice to get excited about crude oil again, probably possibly making a bottom as well as equities maybe. So again, what do we need for this to go higher? We definitely need the dollar to go lower. And that's something that I've been pounding the table on. Let's go ahead and go over that here in a second. And I did post a couple of levels for you guys regarding the dollar and on yields on Instagram. So again, if you like that post, make sure to like it or you can save it as well. More great stuff to come. You can see on the 1 hour chart, we're just retesting the 50-day moving average. We talked about this yesterday, I believe. Again, the kind of overshoots that we get with the dollar, then we get a slight pullback, and then an overshoot, a slight pullback. It seems that we're still kind of in that same pattern. So I don't want to get too excited either. We do want to get below 110, but really the level you're looking for is right around 108.81. That's your 50-day. And just like crude oil rejecting at the 50-day MA, you could see that the dollar, their support is the 50-day MA. So something has to break. Something has to, kind of give here. So with that being said, that's putting the pressure on equities this morning after a two-day fantastic rally. One of the best rallies in the market that we've had in a while. Keep in mind that all the best best rallies actually happen in bear markets. So again, take that with a grain of salt. But again, this is why people stay invested over the long term. If you kind of get in and get out, you're going to miss the best 5 days throughout the year or throughout a period of time because you're trying to time it. So that's why it's autopilot, just dollar cost average if that's the case. Let's go over 10-year Treasury yields here this morning. Here's the chart that I posted yesterday on Twitter and on Instagram regarding S&P, regarding the technical charts. We have a 3,700 gap fill. We also have the top level resistance of 3,900. Now, do not confuse SPX with SPY. That's a common error, and I totally understand that. You can't trade SPX in terms of owning SPX. This is just the index, just like the Dow Jones index. You can buy futures contracts against it that track the index, but the index itself you can't buy. The S&P 500 or SPY, S&P 500 ETF, now regards to that, that's an ETF that's based on the S&P 500 index, just like another derivative of futures or so. So again, your spread or the cash S&P 500, which trades from 9:30 to 4, there is no pre-market, there is no 24-hour trading like futures. So again, you got to look at it at that. You do also have fair value when you open how the S&P and S&P futures, they try to line up sometimes. I think there's a spread right now of about 10 to 15 points currently. So again, this is S&P 500 spot, first level resistance, this downward channel that we went ahead and drew, 3,900, but we also have risk to the downside of that 3,700 gap fill, which could definitely fill. Remember, we know the drill. Around 80 to 85% of the time, gaps do fill. They don't fill all the time, but it is a good roadmap to have. About that 50 MA, we've been talking about 50 MAs this morning. 4,002 for S&P 500 key level. If we can break above that, then things start getting a little interesting. We also have a gap to fill at 40.85. That's gap number 2. And there's one more on top of that. So again, you start breaking the 50. That's where, maybe we can start getting a little bit of a move. But here's the problem. We also had that pop in the summer rally of around 19%. I did the math here, and I didn't want to put it on the chart because it would just be too crazy to see. If we had a 19-point pop, the exact same rise that we had in the summer, that'll get us to right here, right at that 200-day moving average. And I even wrote it here, but I didn't draw the price difference. So that 200-day, guys, that's the big ceiling. That's what we're watching for. Again, I'm not upset that the stock market's higher, but we just can't sit here and say that it's over because in the summer we had this rally too. I'm not saying the world's over. I'm not saying we're going to sell off immediately. I'm just saying take things day by day because the last time we had a nice pop, it got sold off. And here is the channel that shows since that point. So again, do we do another a bear market rally of a 19-point pop to around the moving average of around the 200-day to around 4203? Yeah, definitely possible. If that happens, all it does is really just confirm this trend line. This whole trend line here, one point since December of last year to March to here as well. This trend line has been rejected. So again, we can get that pop. Don't worry, I'll be excited too. But again, we could roll over as well. Now, if we break above this moving average, all bets are off. Then we could start talking about end of year targets, possibly getting to 4,300, 4,400. Who knows? That is definitely a possibility where we just close the end of the year, even with all this volatility, down about only 10% or so. We'll see. Again, just have that in the back of your head. In regards to the 2-year, let's go ahead. And I know I pound the table on the 2-year because this is really the expectations of the Fed. So again, we do have a pop in yields today, the dollar being higher, about 4.15% on a 2-year. On a 3-day basis, again, no real resistance has been broken. Maybe 420 will be your resistance there. Let's take a look at a 10-year. In regards to the 2 year, you want to get below 4. Again, if you want to see continuation in the equity markets, the assumption is that we all want stocks to go higher, right? So we'll just play with that. 3.8% would be my resistance here on the 10 year. We're sitting at 372, about 8 basis points below. Again, a nice rise this morning. So again, that's putting pressure on equity markets. Let's go ahead and move this over here. I know I went over the tangent for all the targets and all. So I put all that S&P target up. Now the real question is, what do we do with this information, Carlos? Do we start buying stocks here? I say just hold on. You know, we haven't had earnings yet. That's important. That's in October. But this is an oversold rally that should have been expected. I've been trying to play these calls for the past week because we were just at oversold conditions, and that happens. We had a nice bounce, I believe, last Tuesday or last Wednesday. That got sold off. We only had one green day. So far, two in a row. Again, if we get a red day today, guys, that is completely normal. Doesn't mean it's a bull trap, bear trap, or any trap. What really matters here is the next support on the 1 hour in S&P futures, not S&P 500 spot, which is the cash. 37.40, you're going to keep that in your head because that's your 50-day. If we go to the daily and start looking at the totality of the market, again, there is no gaps to fill here. There's gaps to fill in the S&P 500. In terms of resistance, on the daily, you have the 38.30 level. That's your 20-day. Why is that important? Because when we trade on the hourly, we have a 20-day period. We have a 20-day chart. So again, if we can get on the green side of that or be above the 20-day, that will show us at least some bullish momentum. But at least on the 1 hour chart, guys, 2 days is not a market make. And again, I like that we went up higher yesterday, the past 2 days. Trust me, I profited from it. But at the end of the day, take with caution. We can get a little bit of a pullback today. Maybe 37.30 as your first support, second support, or last support to me would be around 36.93. If not, that pivot point is right here, 36.50, 36.39 or so. That's your Fibonacci retracement that has not been redone because that is the lows of June. I'm going to keep those retracement levels there because it has acted as support so far. That's a lot of speaking. Let's see. Morning, Carlos. Which indicator you prefer to see volume on the day? I have my volume here, and you could see on the charts right below, they overlap. So I kind of use that for volume. You could always take a look at other indicators. You have level 2 if you really want to get into getting the right price. You could see the volume traded. But for the most part, with volume and options, of course, you're going to go ahead and take a look at the options chain, volume, open interest, percent change, bid and ask. I mean, in regards to volume, that's pretty much all I see, and the overlaps on SPOOs, which is S&P 500, since that's the most universally traded futures contract on planet Earth. Pretty good idea of where the market is going if I could see some volume on S&P futures. Appreciate the insight. Thank you, William. Need to see earnings to understand end of year targets. I completely agree 100%. Thank you. Again, guys, we have a PE multiple right now of around 18, let's just call it. That's above the median. Again, not horrific, but we don't know. We know what the P is, but we don't know what the E is yet. Higher dollar, we're going to expect some EPS revisions to the downside. I think in terms of the next earnings cycle, I think that would give us an indication of a bottom. And the only thing I would say that would give us an indication of a bottom is if the big boys, the Apples of the world, the Teslas of the world, the Googles of the world, the Microsofts of the world, Amazons of the world, when they capitulate and they consider them to be the safe money in the market. Again, these are names that many people have held over time, Meta withstanding, obviously. But again, those big names, those are the final ones in a bear market to fall. And again, the faster we get that, the faster we're closer to a bottom. So again, I think that we might get a little bit of a capitulation effect with those earnings being so weighed down with the dollar. That could indicate a bottom since that bad quarter, again, I'm assuming a bad quarter. If we get that bad quarter coming up, then the forecasting expectations come down at a perfect time when possibly, we don't know, the Fed actually reduces rates or pauses or pivots. So I think that you still need to kind of eat your vegetables a little bit, guys, here. I know 2 days is nice, but I don't think we're out of the woods just yet, just because we have earnings. We also have CPI this week. We have a jobs number coming out on Friday. So again, the last 2 days, great. Could we get to that 200? Maybe. Could we break it is the real question. And what's going to tell us that? It's going to be bond yield and it's going to be the dollar. So always keep that in the back of your mind. The macro is super important. The VIX today is at 29.65, below 30. We'll round out the day with gold futures down about 0.67%. Thank you, dollar. And then we have dollar yen up about 0.27%, 39 pips, 144.54. Euro dollar 98.90, and about 97 pips. And the pound dollar is down about 1.48%, 170 pips down this morning, 113.04. Bitcoin still hovering around that 20,000 level, 19,090, excuse me, 19,910, 1321 for Ethereum futures, down 2.33. Blame our good old dollar, American dollar, because that's what they're priced in. We'll go ahead and leave it there, guys. I will catch you guys tomorrow for the morning note, 9 a.m. Eastern Standard Time. Congratulations to Aaron Judge, American League Home Run King. That's why I have the hat today. He hit number 62. He broke Roger Maris's record, a big record, obviously. It was great to see the highlights on that. So go Yankees. Hope they do well in the playoffs. Let's see what we get. But Aaron Judge, my MVP, and congratulations to him. Like he watches this anyways. But still, it's good to give props, especially in sports. Have a great rest of your morning. I will catch you guys tomorrow. Cheers.